Hello and good morning, listeners. This is Almus Market Mornings with Jayaram Krishnamurthy. And folks, it's the day many market participants have been keenly waiting for. Donald Trump will be sworn in as the president for the second time today, and everyone awaits the kind of executive orders he brings along with him. And quite an interesting sight was the significant rise in the cryptos post Trump coming in. I mean, how pro can a president be on the crypto front? On the Asian front, Bank of Japan, as many as 90% economists surveyed by Bloomberg are saying it is set to hike rates. For India, the RBI reserves slumped further, bringing the tally to USD 625 million as per the latest release. Now, JK, what do you think? What will Trump bring in, and whether BOJ will hike rates? Also, would the interventions by the central banks be seen, or the recent free float observed will continue?
Good morning, Shikhar. Good morning, all. It's one of those US holidays when actually market looks forward to a lot from the US, and in fact to get a major direction, at least as far as the currencies are concerned. We are actually into the third week of the new year, but unlike what we have seen historically, we are yet to get direction for the currency markets. No, of course, the dollar strength has been dominating, and most expectations are that the dollar strength will continue because of the way that Trump policies will evolve in the coming days. However, if at all you have to see dollar reverse its course, it has happened only on two counts: a loose monetary by the US, which is almost impossible now, and a better performing other developed economy, which is also not the case. So the by default, I think dollar strength will continue. This is the overall view that we approach today's event. Now, tariffs are almost certain, and if they are not, if not announced in a hefty way, it will still continue to remain a suspense. And this alone means that strong dollar will be supported. The only way I can see a change in direction for the dollar is an unlikely policy statement on the dollar, for from the Trump administration, which can see the greenback lose sustainably. So every which way you see the day's events and the coming days probably will see more strength in the dollar, and perhaps a watered down tariff policy may see some short-term, weakness in the dollar as a correction. Indications are that the new administration, apart from tariff, will also move aggressively and push the limits of presidential authority. And most expected day one of executive orders, some suggest 100 or more. I know it's unclear how much signal will be there amidst the noise on the four channels that we are watching: the regulation, tariffs, immigration, and taxes. Now, even ignoring the effects on the dollar, tariffs are not without other major effects. The most important move will be how it will affect China, because if whatever move they do on China, it can also retaliate with its own tariffs, as it has done before. They have already reportedly built up a lot of retaliatory tools, as seen in the recent ban on export of some key metals and commodities to the US. So one tariff import direct impact, and then the indirect impact of how the global growth and trade will be affected. So this is our center focus. So, and what how it will affect currencies will be what we are looking at. So possibly a balanced act by the administration. They will announce something, but mostly slightly less than what market may be expecting, just to extract some other deals from the countries that will be sufficient to keep the dollar rising too far. Another important thing that they also have to keep in mind is that if they impose heavy tariffs, it will go against delivering what Trump has promised during his election campaign, that is to reduce the prices, and if tariffs are imposed, that is not going to be delivered. So that's the overall expectation. The various probabilities that I am seeing. Broadly, dollar strength to continue unless there is some surprise on the dollar statement, or a heavily watered down statement on the tariffs. Apart from these expectations, on Friday we had seen, of course, strong data from China. The Q4 GDP growth coming at 5.4%, well above 4.6% that was seen in the previous quarter. But reaction has been very limited because market is focused on what is going to come from Trump tonight. Also, as you mentioned, the Bank of Japan most likely, well supported for another rate hike on January 24th. But the only thing that can probably hinder this, or maybe stop Bank of Japan from doing this, is if there is a heavy tariff that is imposed by the Trump administration, which is likely to impact everyone, including Japan, on their exports. So in that case, they may actually postpone their action on raising the rates. So that's about how we see it. Of course, talking of other economies, Europe still has many other issues, even if there is some support for the other currencies due to Trump's policies. It may be short-lived because Europe is not showing any signs of emerging from their slump. Coming to the rupee, we almost traded the new all-time high on Friday, but the closing was the highest level, and the news has not been good because, as you mentioned, the headline reserves have fallen to 625 billion, and going by the latest RBI bulletin, which has seen the forward short position increase to 58 billion. So we are talking something like 575 billion of reserves. And what is it? It is a huge come down from the September peak of net position of $689 billion. So that, along with the fact that the dollar remains strong, outflows are continuing, and the RER, according to the same report, showing at 107. Nothing looks, as a reversal for the dollar rupee, at least in the short term. And even if the dollar does lose in a broad way, gains for the rupees is going to be very, very limited in the short run. So we are not seeing major relief for the rupee, definitely. But at best, we could be ranging between 86 and 86.70 for the time being, until some direction change. Of course, domestically, we are also just 10 days away from the important union budget that can give some direction to the markets, particularly on the equities, and whether the FIIs were already closing in on minus 20 billion of outflows is actually something that we look forward to, whether they see more reasons to sell the Indian stocks. That's a big question. And so there are many questions which are not really answerable as far as the Indian currency is concerned, which is still therefore by default on the weakening side. So all the best for tonight's events, which can bring in a lot of movement from tomorrow onwards. That's it. Thank you.
Okay, JK, that was good. And yes, folks, the expectations of dollar strength may continue, although a watered down tariff approach may bring in some sort of temporary USD weakness. The tariffs are there, and how much is to be seen in the coming few days. Along with that will be the impact of global trade, which will be washed out for because of these tariffs. Bank of Japan, as JK mentioned, is quite likely to hike the rates at market participants on Jan 24th, although a heavier tariff by the Trump administration may influence this particular decision. On the domestic front, as we can see, rupee closed on its weakest levels this Friday, but the RBI reserves positions as well as the RBI forward position was the surprise factor for a lot of participants. Even though the reserves number released was at $625 billion, the latest released bulletin showed 48 billion of short position, which brings the effective reserves at around USD 577 billion. Union budget, on the other hand, is being awaited for the equity markets because a consistent outflow by the FII has not done much for the equity markets as well as not much for the currency. So overall, the currency pair may remain on the weaker side, although the range, as JK mentioned, is towards 86 to 86.70. That's it for today, folks. We shall come back again tomorrow with another round of updates, majorly from the US swearing in ceremony of the new President Donald Trump. Thank you so much for joining in, and we'll be coming tomorrow again. Thank you.